Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, May 12th. It's currently about 5:30 in the afternoon. Markets tonight, I think, probably start a little bit easier, but there's a few factors to discuss here. First of all, Friday's USDA reports, I don't think there were anything in those reports that were significant. I don't think there was anything that was a big surprise. We know the markets had a bearish bias here for some time, and I think that to see Friday have losses develop of 19 cents in Chicago wheat and 12 cents in corn and a dime in beans, I would classify all of those as being pretty much overdone in relationship to the data. The data was not statistically significant in terms of a change from expectations. The first look at the new crop balance sheet produced carryouts that I would agree are bearish, and they are bearish if those carryouts are ultimately achieved, and they're bearish to price levels that are probably lower than what current new crop prices offer. But that's a big difference to say that it's ultimately bearish versus saying it's bearish right here, right now. We got a lot of growing season ahead of us. I think that the national yield USDA used on corn certainly could go up from a standpoint of trendline yield capabilities, but considering the planting dates that we have, I think it's not impossible to get a better final yield than what we see, but I think it's highly unlikely that over the next, well, let's put it this way, into mid-June, late June, probably into mid-July, the odds of getting the odds of the market thinking we're going to have a higher yield than what USDA offered us on Friday for a new crop assessment, I think is extremely unlikely. And I think it's more likely that you will end up having concerns and worries that you're going to have a difficulty maintaining the type of yields projected by USDA on Friday, and thus you'll have a difficult time maintaining those type of carryout projections. There's a lot of time between now and ultimate new crop harvest and production, and I think the market is very bearish. We know that. I think it's too bearish, is my personal opinion, and I think it's likely that Friday's data that we saw from USDA is the most bearish outlook that we're going to have now until probably at least mid-July, if not early August. So from that perspective, what's the bear got to offer that's going to make it more bearish here in the next few weeks than what we've seen here over the last couple of weeks. Price action during the last couple of weeks has been stabilizing. It's been supportive. There's certainly been days that the market has performed better than most bearish rhetoric would suggest, especially in soybeans, that they've certainly outperformed bearish expectations. In the case of corn, it's true that as we look to the forecast for this week, you're going to have broad opportunity for field work, and planting activity will progress fairly significantly this week. But by the time you get towards the last part of this week, you're into the 6 to 15 day outlook. Now you're back to having moisture that will stop planting activity, and I think that by the time you get to a week from tomorrow, by the time you get to the 20th of May, your unplanted acres are going to be much larger than you want to see if you're going to have an opportunity to produce trendline yields in corn. And I would argue that the odds are against achieving what USDA offered for yield expectations if the planting progress a week from tomorrow on May 20th is notably behind normal, which I expect that it will be. You're just going to have too many acres planted too late. Now that doesn't rule out the possibility of having better yields than USDA plugged in on Friday, but it makes the odds of that happening significantly reduced than what they would have been, say, 3 weeks ago on a more normal planting date expectation pace, and I think that's the difference. And so consequently, I think the market has absorbed a lot of bearishness. The trade's got short positions established. There's a lot of bearish sentiment, especially towards corn. The bean market's performed better than expected. It is true that we're going to have good planting progress this week, but I think overall that there's been a lot of this bearishness has already been factored in. I would caution against trying to be bearish because this week and early tonight based on expectations of planting opportunities this week and favorable weather conditions this week, because I think it's too small of a window of favorable conditions. And I think there's still a storyline here for the percentage of acres that are going to be planted later than desired. The technical makeup of the market, I think, is supportive from the standpoint that, yes, you can get some weakness earlier this week, but being able to generate downside momentum and follow through to Friday's weak performance and being able to generate sustainable weakness and momentum below Friday's lows, I think that's going to prove to be very difficult. If the market does stabilize this week and we are not able to go significantly lower than Friday's lows and we're able to stabilize and get some recovery, start trading in positive territory from Friday's settlement, I don't think it takes too much of a rally for the bears to begin to say, this isn't right, we should be breaking. I think they're getting a little bit tired of market action anyway. They've had the news and the sentiment on their side, and the market is not able to generate trending lower trade. We're more of a stabilizing pattern, and we're finding support here at the lower end. So I think it's a very good chance that we're going to see short covering activity over the next 2 or 3 weeks. I think it's very possible that any weakness early this week will be somewhat limited, and I would caution against trying to be bearish here based on a favorable weather forecast for this week. The other thing to point out on going back to Friday's reports, I think the demand calculations that they've used are reasonable, but let's say you believe that the crop is going to get bigger in the case of corn, I think as prices get lower under that assumption, your demand base is going to expand relatively quickly. You've got tight U.S. hay stocks. You've got a situation where the marketplace is going to see less and less wheat feeding in the months ahead. And I think that if anything, the demand base is large enough and able to recover enough that the demand that USDA has projected on Friday, if anything, is on the bottom side, the low end of demand projections. And I think that's going to have an impact on carry-out levels. So it's still going to be relatively important that we maintain a market attitude that yields are on pace to achieve at least what USDA offered on Friday. And I think the odds over the next 6, 7, 8 weeks is going to make that difficult for the market to be confident in that. And as that confidence is unable to grow, I think that leads towards short covering, and I think it leads towards price recovery. So look for some sort of weakness here to begin the week based on this week's outlook for favorable planting conditions, but do not expect much weakness to build. Do not expect momentum to build to the downside. Expect technical support to surface, and I don't think we're that far away from generating price action that triggers some short covering activity. That will produce better pricing opportunities for producers in the next few to several weeks, and I think that it is right to be looking for pricing opportunities. I don't think it's right to be expecting that it's necessary to sell here on weakness. For the DPP Grain Desk, this has been Duane Lowry. Thank you.